Wednesday, the 14th of October, I am Bosin Omofaye, and this is another edition of Frontier Opening Bell. Welcome my panelists. Onyeka Ijoma from Vertiva Capital Management, Investment and Securities Trading Firm in Nigeria. Onyeka is in charge of industrial goods analysis. Morning, Ijoma.
Morning, Bosin.
Thank you very much for coming. And Ali Sega is a risk and governance management specialist and expert in North African economies and markets. Is joining us live from Dubai. Thank you, Ali. It's good to see you again.
With pleasure, Wilson. Pleasure.
Thank you. Thank you, Ali. We appreciate your time, everyone. Ayode Jiebo is also joining us from Greenwich Merchant Bank. Thank you so much, Ayode Ji. We appreciate your time.
Good morning. Thanks for having me.
We know it's business time, so let's get started. Across the markets, Frontier African stock market for Tuesday, the Nigerian market managed to come back by 0.02%, very, very soft. But as we all knew, as outside the US market, European markets finished yesterday in the negative territory, a bit of that into the frontier markets and emerging markets. So you can see the Ivorian market, the Kenyan market, the Egyptian top 30 index, and the South African GSE, which has a very much stronger correlation with the rest of emerging markets, 0.90%. Well, let's go straight to North Africa and look through, although the biggest story was around the World Bank IMF story, but when you look at the North African market, Carthage Cement is one of the biggest cement makers in the Tunisian market. And the shareholders have given approval for the companies to restructure the company's activities and reposition it for much better. We're also seeing a whole lot around fintech in North Africa, with Egyptian startup NowPay raising $2.1 million to expand their team within the startup and expand their footprint across North Africa. That is one big story we're seeing now across Africa when it comes about startups around the fintech space. Ali, coming here on this story, please.
Yes, thank you very much, Wilson. I will just come back to the subject, to the subtopic of fintech in North Africa. So as you said, it's a very, very important topic in North Africa. Fintech startups, they are all working to attract investment as much as possible, because fintech is possible only if you grow. And there is a big seeding, we can say, investment problem in North Africa, because there is a lot of projects, but this project cannot really scale. So what all these countries are trying to do, this is to attract as much as possible investment. But for that, they need to change the regulatory framework, to secure the investment and all this kind of stuff. So we are far from, we can say, the unicorn that you can see in Wall Street or other part of the world. When we see that one of the main fintech in Egypt, Egypt is a country with 100 million people, is attracting, we can say, only $2.1 million, is not that much, in fact. So it's very, very challenging for all these North African countries to attract investment. So they are all working on it. Algeria recently announced that they will build a specific startup framework for investment in Algeria. So this framework will be under the Central Bank of Algeria. So they are all working on it. But as you know, as of today, to attract investment is really a challenge due to the COVID-19 situation. So it's really, really challenging for all these North African countries. After, I would like to come back also to the story of BOA and Chinese Commercial Bank, in fact, Chamber of Commerce of China. China is more and more important in North African country. A few years ago, China was not this much important. So as of today, China is one of the only investors in this country. So you have mainly two countries, China and Turkey. So China is the biggest one as of today to invest in this country. So it's really, really interesting to see that China wants to develop the trade with North Africa. North Africa, the issue is that they don't produce a lot of goods, in fact. So is this new deal will be only to, we can say, to secure for China to secure their market, or for North African to export to China. So as of today, it's more for Chinese to secure these markets. So this is also a challenge for these North African countries.
Interesting. Thank you so much, Ali Sega, there breaking down the North African space for us. Let's look at the West African market. Nigeria, with the NSAS protest impacting the city of Lagos in terms of vehicular traffic and the country's political capital, Abuja. But the big story from the market space relates to the First Bank of Nigeria Limited, talking about a global debt market, 5-year dollar-denominated senior unsecured notes to be offered. No amount has been given yet. In Ghana, the IMF forecasts there will be a 16.4% GDP fiscal deficit this year. For Nigeria, the contraction this year will be Nigeria's will be about around 4.3%. That's slightly still a contraction, but a little bit lower than about 5%, which was earlier forecasted by the World Economic Outlook back in June. Globally speaking, a negative 4.4%. Yesterday, the SEC in Ghana issued a new minimum capital threshold for market operators, and for Ivory Coast, the Cote d'Ivoire, the Treasury is listing the first 7-year and 10-year paper at 5.8 and 5.90%. Oh, so that will be on October the 26th, by the way. Let's get Ayodeji to comment very quickly on the FBN, First Bank Nigeria Limited bond, which has been proposed. There's an investors call today at 2 o'clock local time, I guess.
Okay, I think this is coming one, I'll say, to me as a surprise, because we've seen a lot of the banks we can see in the last 2 or 3 the last 6 months have done some form of early call or a tender for them to pay off their loans, because currently dollar-denominated loan opportunities becoming limited due to the challenges, very obvious challenges in the country. But I feel it's also a strategic position, maybe to show up their dollar, to create dollar assets, and for them to show up their dollar balances. But I will be looking forward to seeing the rate at which they would issue it, because I still feel that when you look at the domestic market, a 5-year instrument is currently around 3 to 4%, which would significantly be lower compared to the rate at which they would issue. So that's not even considering the devaluation or the exchange rate risk that they may still face. So, but if they as a bank, they've been able to identify dollar-denominated loan opportunities that those companies are also earning in dollars. Yes, maybe that's it may be a positive one, so that they are matching. Then there's no currency mismatch. But we'll see as events unfolds, because we still feel the domestic market still looks more attractive than the foreign international market.
Okay, that's well said. Onyeka, when we talk about the economic forecasts by the World Bank, IMF, and all that, what role do you think industrial goods space have to play in trying to mitigate? Yes, we'll have a very hard fall, as it were, 6.11% in second quarter. Full year as well, the IMF is looking at about 4%. So this is not significantly far from where we were before. But again, what do you think? Do you think we're we're in the final quarter, by the way? So what else is left?
Okay, thank you for the question. I think to answer the question, maybe we should look at how deep the impact of the pandemic is expected to be on the global economy. Even though we've had an upgrade in inverted commas, because the global output is still expected to decline by over 4% this year, which is very significant. the long-term impact on this is still going to be very severe in a number of ways. Because yes, things are expected to be slightly better, but it's going to have a long-term impact. The labor force does not bounce back as easily as the general economy. Those who have lost jobs are not suddenly going to start earning the same amount they were earning before. There's also an impact on human capital development, as there's been significantly lost time in terms of schooling. There's an impact in investor confidence. There's an impact in balance sheet. There's an impact on federal coffers. And all this is going to have long-term impact on aggregate income and consumer demand in the long term. Now, this is where infrastructure comes in, and this is where the industrial goods sector comes in. We know that over the medium to long term, the types of investments that tend to have the highest fiscal multipliers are capital projects. These are projects that have impacts across different waterfall impacts across different levels of the economy. And while at the moment there's a need for a lot of monetary relief, whether in terms of conditional or unconditional cash transfer to citizens, monetary easing and all that, there has to be a corresponding fiscal drive, especially in the area of infrastructure investment, to push to help the global economy recover. We are looking at the IMF estimates that over the next 5 years, the global economy is going to lose around $25 trillion, which is very significant. That's compared to the pre-pandemic expectations, which is very significant. And so yes, the industrial goods sector and infrastructure investments as a whole have a significant part to play in helping improve things from here.
Thank you, Onyeka. Ali, the World Economic Outlook report, which came out yesterday, is global in nature, whether it's Sub-Saharan Africa, North Africa, but the global economic contraction review to negative 4.4%. The V-shaped recovery looks like it's not going to happen anytime soon. What do you think?
Yes, so to be honest, we thought that it would be worse. To be honest, 4.4 is not that big, but it's not good in the long term. But the issue with North Africa, they are not really part of the global supply chain. So the impact is not that much, in terms of the global supply chain, because they are not really integrated. So I think that first, all these North African countries needs to be integrated to give some added value to the global supply chain. Then we can see the real impact.
Okay, let's look at the Southern African market for today's show. When you look at Moody's, Uganda's rated BA3, South Africa, the IMF retained negative 8% contraction and sees 3% growth for next year. That 8% contraction will be much bigger than Nigeria's 4.3, by the way. Moody's talked about the global Eurobond volume of $590 billion will beat that 2019 figure. 2020 will be much bigger when the data is out. Botswana's stock exchange has asked the Stanbic Bank, one of the largest banks in the country, to list the 250.7 million local currency, the Pula senior unsecured notes. And there's a big problem with the Choppies. Of course, the Botswana supermarkets chain stores is taking PwC to court, and the lawsuit is $40 million. The World Bank has a new set of data about the global debt portfolio and sees $1 billion cut in Angola's obligations to China. Ayodeji, when you look at the Eurobond, Nigeria's finance minister yesterday says we'll likely go to the market next year. She's not sure when we'll do that. But Nigeria definitely needs budgetary support. Do you think Eurobond is the way, since Nigeria is not asking for debt forgiveness, officially has not asked for debt moratorium on interest payments? so far?
Well, I think firstly we have about $500 million worth of Eurobond that will mature in January, so that would be a major shock to external reserves. So I know the Minister for Finance or the ministry is also trying to see if there's still a lot of pressure on the reserves by then, they may want to ignore the exchange rate risk and even the pricing and go for the to refinance the maturing loans or the maturing euro bonds. And also, if you look at you spoke about maybe trying to ask for debt forgiveness and restructuring of the loans. So there are also the most times is mostly the multilateral loans that you can even restructure. For restructuring the private loans sends a very negative signal to the investors, because they are always mostly private investors. It's the multilateral loans that I feel we can restructure and ask for moratorium. So for the Eurobond, that will not be applicable, not to send any negative or for us to see a rating that would further take us to non-investable grade. So for us, we are looking at pricing and looking at the exchange rate risk that is involved. So if government is able to raise a 10-year Eurobond domestic bond at single digits in Naira and has no exposure, such that our debt servicing in Naira terms will continue to increase when we have devaluation. We saw that major impact this year. So that's a major risk that I know government will need to look at the cost benefit, do a cost benefit analysis, and to see whether they just take that bullet and allow that 500 million hit our reserves, and they raise a naira to fund that particular gap, not for the reserves, but at least to fund their own obligation.
I'm not too sure if our reserves, we can take a $500 million hit as of today. I'm not too sure Nigeria can afford that. Perhaps if you ask the NNPC, but it's going to be very difficult. By the way, the last restructuring and deal that NNPC was trying to do was just 1.5 billion US dollars. So if you take $500 million out of it, that deal is nowhere to be found, and we don't even know if that deal has been concluded yet. But a few banks were involved, and it's still in the news. By the way.
Yeah, so we'll have to just pay the price, pay that premium based on the risk, and just for us to be able to preserve our external reserves.
Yes, we could just roll it over and just bite the bullet, as you put it, just refinance it, and that might just be the way out. Let's look at East Africa very quickly before we wrap up the show this morning. The Uganda's BA3 rating by Moody's, about a 9-page report on Uganda's sovereign released yesterday. Moody's is a bit bearish on Uganda, says the economy is small size, and a whole lot of description about this economy. Kenya's FIDA Bank, VCA Capital, journey with FIDA Bank to boost Africa's expansion. Kenya seems to be the hotbed of banking consolidation on the continent. BK Capital is a subsidiary of the Bank of Kigali, and yesterday floated a unit trust fund, Aguka, for local investors. The idea is to get Rwandans to invest in this in the young stock exchange. Less about a dozen listed companies. The largest was a cement company, which was listed just about 2-3 months ago. South Sudan wants to replace his 9-year-old pound since the country broke away from Sudan, its northern neighbor, but no date has been announced so far to get that done. So that summarizes the East African space. Finally, to start to wrap up the show this Wednesday, Onyeka, where is the industrial goods? Where's the market? What's your take on the market for today? And especially for the industrial goods sector, they seem to be largely muted yesterday.
Yeah, I mean, after the huge rally that we saw, over a couple of weeks, we've seen the market sort of cool off, and investors have been taking their profits. And it was only yesterday that we saw in the overall market a very minor mild gain, even as the market, even as trading, was still largely mixed. That said, for today and for the rest of the week, I think that things are going to be a bit, the trading is going to be a bit volatile because we'll be seeing, ahead of the Q3 results, which are supposed to start coming in, which we expect to start coming in for sometime next week. Investors should start taking positions. We expect that we'll start seeing investors, take positions in some of the stocks that we expect to perform well. Industrial goods stocks are generally expected to perform well. We saw that in the second quarter, even despite the lockdown and the pandemic, we saw them post, a strong recovery, between May and June, even when, April demand went down significantly, and the expectation and the data that we've been, informal data that we've been getting from management suggests, even more that in the third quarter. And so, I expect some positive sentiment, for the industrial business as investors start to take positions ahead of the earnings. But overall in the market, we should see some volatile trading, but generally higher levels of activity.
Okay, Alice, are you watching financial markets in North Africa? Where do you see investors play? Is it in currency? If it's yes, I'm sure the Egyptian pound will be in your crosshair 24/7.
Yes, it will be mostly, I think, in currency and in some stocks, in fact. So there is a big, we can say, investment potential on all this market on the stock exchange, in fact. But the issue, you don't have enough, we can say, especially public company listed in the stock. But if the government of North Africa choose to list all or a part of their public company in the market, it would be a big advantage and big benefit for all these countries. For example, I will just give you a few examples. For example, in Algeria and Libya, roughly 90% of the banking sector is under the government, we can say, bank entities. So if they decide to put, for example, bank on the stock market, it can attract a lot of investors.
Very interesting. There's a whole lot more. If you some of these and governments sell down on the shares, that will provide liquidity for some of the North African stock exchanges. Thank you so much, Ali. We understand that point. Thank you so much, Ali Sega from Dubai. Thank you so much for coming through this morning. Onyeka Ijema from Beteva Capital Management. Thank you so much as well. And Ayede Chebo from Greenwich Merchant Bank. Good to have three of you today. Thank you so much. See you tomorrow.